All right, guys, welcome back. It's been a while. S&P 500 SPY ETF technicals to watch next week. So next week we know the most weighted event, FOMC, 4 days, 15 hours. So what I'm watching into going into next week from here overall in markets, and S&P 500 SPY is pretty much near its December highs were. That's where pretty much Jerome Powell knocked down the market. So what's going to happen next? We will see. That's the resistance to watch from here. That's 410 to the downside. I'm going to be watching moving averages. 200-day moving average, we're well above it. This red line on my chart. 50-day moving average, this yellow line, we're well above this level. So these are the levels to watch as a support levels. And also, if you are bullish, if you think that that's it, market has bottomed out, that's your trend line to watch as a support. Okay, so these are the levels to watch. Okay, let's take a look at what's going on this year so far, right? So I have gone to take a look at the where did the rally come from? So this is the heat map year to date. What stocks have contributed the most to that rally that we had in S&P 500 and also other indices as well, right? But at this time right here, I'm just looking at S&P 500. You can see from the bottom, we're not talking about actually from the bottom. Year to date, TSLA is up 44%. Okay, from its bottom, it's more. It's a lot more, 60-70%. Amazon 20%. Communication services, you can see Netflix, Disney, Google, Meta, all these guys are up. Semiconductors are pretty much going. They did go really bananas. Especially if you look at the Nvidia, such a large cap stock, it's up 40% year to date. It's been only. It has only been 1 month. Okay, so that's where the rally came from. Apple and also fintech, right? MasterCard, American Express, PayPal, Visa, all these guys are up nicely as well. You can see consumer defensive and healthcare still. There's not much money going in there at the moment because they're still lagging. And a little bit of energy. People bought the dip in energy because you can see in also I follow the U.S. gas retail prices pretty much for the past 1 month. Let's take a look at 1 month. You can see maybe even 3 months. If you take a look at the 3 months, it did dip like going into Christmas, and now it's picking back up. So energy, people bought the dip in energy, but the point is that's where the action is. So tech driven rally. Okay, tech can pull back anytime, so you got to be cautious, trying to go long and pretty much make up your mind and think that okay, that's it, we are bullish, everything is clear, we're gonna pretty much go to S&P 500 to 5,000 or SPY to 500. So I'm going to also show you just today's action in terms of option volumes. You can see Tesla, Apple, Amazon, they have been leading. And you can see the amount of calls, percentage of put to call ratio, basically, percentage of calls being purchased in these big tech names. Tesla, today alone, 60% were calls. Amazon, 74% calls. Apple, 63% calls. Nvidia, 54% calls. Meta, 67% calls. Microsoft, 54%. AMD, 62%. And that's the theme, basically. Tech-driven rally. And another thing I wanted to show here is put-to-call ratio for S&P 500 SPX. So it did tick higher. More people bought puts today. Today, SPY, S&P 500 is slightly positive, 0.2%. And what I wanted to show here as well, you can just go through the individual names as well, like what stocks have like year-to-date performance of the components. You can go through slick charts, and we just went through this. I wanted to show you the S&P 500 stocks, percent of the stocks that are above their 5-day moving average. 67% of the stocks are above 5-day moving average, versus very recently when we put a you can see 124 January 24th S&P 500 was somewhere here at 400 basically, and a bit of a divergence here forming. We are in indices pushing higher thanks to, we know S&P 500 is market cap weighted, and thanks to those tech couple names, it's pushing higher. But as soon as those stocks stop going higher, or if they pull back, it's going to drag down everything, because you can see it's not a broad rally. 67% right now, percentage of stocks above 5-day moving average, and 78% back at that $400 level on SPY a couple days ago. So a bit of a divergence. I don't want to put too much of a weight into that, but something to be cautious about, because if you are a momentum trader, if you think that momentum is strong, you want to see these numbers pretty high actually. 20-day moving average, stock percent of stocks above their 20-day average, and 5-day especially average moving average, percent of the stocks higher. You want to see these numbers higher as well. So percent of stocks above 50 days, 72% right now. Above 200-day moving average, 66%. It's decent numbers, but you want to be careful, ultra short term going into Fed as well. So what I'm watching from here, so basically in terms of support resistance levels, we did talk about that. We're above this blue downtrend that a lot of people were talking about and were watching about. We're above that, so you can watch that level as a possible support as well if we dip. But if these levels are not going to get respected, and if market pretty much does something like this, you got to be careful trying to buy the dip, because it's basically tech. If you go to take a look at those 3-4 stocks that did contribute a lot if you take a look at their individual stock price action and the levels, you can see Apple is at the resistance 200-day moving average, and they're reporting earnings next week after the Fed basically. Anything less than what market is expecting, if it pulls back, it's going to drag down market. TSLA, a little bit overextended in my opinion, right here, right now. Volume is insane. Today, a lot of people got squeezed. 306 million shares traded, highest since, oh my God, it's been 3-4 years since it traded at this level. Actually, it was in December of 2020 when it traded somewhere around like 600 million. Ever since, it hasn't traded this high ever since that date, basically 3 years. So it's a bit extended to me. Amazon, they're gonna report earnings as well. I don't want to say it's extended. It can definitely push towards its 200-day moving average. But again, if the retail sales come pretty much weak, it's going to drag down markets. And we know these names have not reported earnings. Google is out there as well. It's pretty getting close to its 200-day moving average. So you got to be cautious when these big names are going to hit their pivotal resistance levels. That's when you can expect S&P 500 pretty much take a break or pretty much pull back pretty decent. So that's the update for SPY. Going into next week, I'm basically neutral to bearish. I don't think that it's going to keep going crazy like that. Upside level, I would be watching for SPY, that level 410, and then we'll go from there. So basically, that's it. Thanks for watching. See you in the next one. Take care. Peace.